Moving on with our high impact news events and our fundamentals for the week of September 4th, 2023. Today's Labor Day for the US. So banks are closed, a lot less liquidity. Today's pretty much just going to be a analysis and markup for the week type of day. But moving on into Tuesday around midnight, 12:30 a.m. Eastern Standard Time, New York time, around my time zone. It's going to be an interest rate statement for the Australian dollar. The latest forecast was the interest rate percentage actually being worse for the first time in the last 4 reports, which is actually saying something for the Australian dollar. So be on the lookout for perhaps a continuation of this. We'll see. And if the actual percentage is lower, then it will not be good for the currency right now. So as an avid trader of the euro to the Australian dollar, one of my favorite currency pairs, I will definitely be trading the New York session around 8:30 to 11:30 a.m. Eastern Standard Time, and I won't be trading London session when this is going to be coming out. Moving into Wednesday, we have another interest rate statement for the Canadian dollar. Doesn't necessarily interest me because I don't trade anything with the Canadian dollar in it, but we do have ISM services, which why we should care. It's another leading indicator of economic health. Purchasing managers hold perhaps the most current and relevant insight to the company's view of the economy. So 3 of the last 5 of these events were actually worse than the original forecast. So it's looking like it might not be good for the dollar come Wednesday morning at 10 a.m. Then we got some unemployment claims on Thursday and Friday. Unemployment numbers coming out, I should say, for the US dollar and the Canadian dollar on Thursday and Friday. So next couple of New York sessions for the US dollar could be quite volatile. But like everything else in the market and trading, we got to remain patient. When the news comes out, we react accordingly and don't try to predict anything, and utilize the confluence trading system that I utilize to the best of its ability. Now let's move on to the technicals here. Starting with the pound to the yen on the daily time frame, we are still in a massive uptrend, so it only makes sense right now to ride the waves of the market. Yes, we do have a slight pullback on this move right here. This move being from this higher low points all the way up here. It seems like price is coming to pull back right now, so using our Fibonacci tool on the daily time frame, we could actually frame a trade perhaps around this specific region right here. Let me highlight it a different color. Around this area, and I'm going to take it on and extend it to see if there's a key market zone on the daily time frame, and there actually is in this area right here. So we'll see if there's something that could possibly come out of this. And let me note this resistance level, pull it across. We have a little bit of a support area right here on the daily. And let me drop down to the 4-hour time frame to see how we're looking right now. Seems like this could actually be considered a demand area right now. Let me take this trend line right off. Get rid of this, clean up our charts nice and tidy per usual. And let me just draw up my market zones as well, because these essentially are what I'm going to be trading off of. Do a blue-gray zone here. Same with this guy right over here. We've got a key level right around here. So even though we're in an uptrend right now, it seems in a fractal market, there's going to be waves within waves. And it seems like off of this gigantic bullish move, we are slowly but surely pulling back. So realistically, we want to be looking for a point of attack for buying orders. But that's not to say that we can't capitalize off of the counter trend moves right now. So even though we're on an uptrend, we do have a high, a lower high, a new lower high point. So perhaps if we flip-flop this right now, we could be looking at, now we're at the 61.8. Let me pull this, put the horizontal ray right here, actually on this key point here. Pull that across. We could perhaps see price push up, come back, and we could possibly see it push up here, make a move, perhaps maybe come back into this previous resistance point, pull back, make a dump into here, and then push on back up, continue its original move right here. And let's configure these. Put another zone right up here. And it's currently reacting off of this key 4-hour market zone as we speak right now. So another area to watch out for is going to be this key lower high point right here. We could probably see it react accordingly, make a push down. And all we're framing this around the pullback on this gigantic wave. From this point right here, that's going to be our baseline low point, and then our baseline high point right up top here. So on this big move right here, that's the leg that we want to see a complete pullback off of, and then a continuation to the upside. Now, there is something to be said of a second scenario. Let's say, so this will be perhaps scenario number 1. We'll write this down. Scenario number 1. Now, there is a second scenario as I'm analyzing this that could come into play, as price could respect this 4-hour key zone. We could see price pull back, break this previous lower high point, and then respond further on up. And then in this specific scenario, I need to see where could price be leading to next. We do have the negative 27% level at 188,500, so I will put a horizontal line right on that and then look left to see if that actually was a key area that market respected. So I'm going to go up to the daily time frame, and lo and behold, as I'm pulling the chart back out, this was a key area of resistance up here. For the most part, we had some support, a little bit more, resistance, a little bit of support right here, in the vicinity of a resistance area right here, and lo and behold, right up top here, we had a significant resistance point. So what I will do now is pull this across and extend this out to the right. There we go. And now let's go back to where price is currently at. Scenario 1 right here. And then we got our second scenario right up top here for the buy. Now let's say that this generated the key peak, and with this lower high point or higher low point being blown out by this could actually just be a selling opportunity. In this case, we want to be looking for these lows to be taken out right here. These lows to be taken out, respected, and we want to see a continuation below the 78.6 into the 100. So let me take these all out right here. So In these scenarios, that's just for the buy, but we got to play both sides of the card here. Let's say price respects this as it is right now, breaks below, retests, comes below here, blows out this old higher low point, respects that, and continues on down to the 161.80% level, which is, in fact, a low point that was currently touched. And that would be scenario number 3 for the selling opportunity. Continuing on to Euro AUD, let's check on the daily time frame here. Still, same situation as GJ. We were on a massive uptrend, currently pulling back right now. Low, higher low, higher low, higher low, continue on up on those higher lows right here. And price is currently pulling back. Let's mark up our daily levels and trap price once again, marking out our key levels to work with. I'll mark at least 3 on this daily time frame here in relation to where price is currently at. Trap price from the below, trap price from the high twice. Going down to the 4-hour time frame here, draw out some key levels to trade upon. We had an area of consolidation right here as price was pulling back off of this gigantic bullish push. One market zone to trade off of. And again, these will come in handy. We had our low on that consolidation that was retested, and now we're breaking down here now. So there is a selling opportunity that will perhaps await us. We'll see. We had another area right here, and now we have our areas to work with. Let's do one more on the low. On the selling side right here, there we are. Pull it across, boom. Now we have our areas to work with. All right, so now we have market structure. High, lower high, lower high, lower high, boom. If we connect this from that low right here, that was no, it was not a 61.8 hit at all, actually. But if we take this on out, pull it across, keep the charts clean, we have our new, most recent lower high point. We'll pull this away. We have this area right here. What I would like to see now is perhaps price make a push into our Fibonacci levels right up top here and continue on downwards to our most recent low point. Low point being the market zone that we attacked on. Take this, we'll mark this wick off. That'll prove to be pretty important coming up. We actually have, now that I'm looking at this in the midst, no, because we already have this one. So as I'm doing this chart markup, you really don't want to be putting too many zones in the same specific area. If anything, you really want to just be getting the most touches out of your market zone. Whether they're supply zones, demand zones, support, resistance, at the end of the day, these are zones in your trading arsenal that you'll be trading off of. So they will come very handy. So we could perhaps see a pullback off of this big area right here. There is no imbalances here though, so I will keep that in mind. And this imbalance was filled, so perhaps we also are below the 200 EMA. So price is pretty balanced out, so perhaps there is no real need for Fibonacci in this case because price already has made its drop. It's balanced out, it's made its drop, it's balanced out, and can perhaps now, since there's no inefficiencies or imbalances in the market, we'll continue on lower. So perhaps we could see a new drop now into this level. And now that it's dropped below this level, we want to see a break. And if it doesn't break, perhaps it'll respect, pop up back up, and then come down here. Break that, retest, continue on lower. Or scenario number 2, we could see it drop, break, come down. Maybe it needs to balance out somewhere upon this. If a sharp selling move comes into place, remember, we do have interest rate statements coming out, so that will prove volatile for this specific currency pair, Euro AUD, and then continue on lower. Now, in the grand scheme of things here, we do have this gigantic bullish push, and perhaps somewhere around here, as we gather confluences, we could see it perhaps come into the 61.8, or it could come down into this market zone and then come back up, balancing out this entire move from here all the way to the high point. So A, B, C, and then D. Pardon my messy charts. So that'll be the story for Euro AUD right now. We could see a continuation, and this could also just be blown out completely, because there isn't any absolutes in the market. But if this pullback remains true, we want to be aiming for the 1.65500 psychological level in between this 50 pip region, between 166 flat and then 166,500. Moving on to Euro USD. Daily time frame, daily downtrend. We had a big daily level being blown out right here, coming into the 1.0700 psychological level. Price pulled back, shot back down very sharp on 2 straight selling days, leaving a daily imbalance right here. Let's actually note that right here. And if I've learned anything in the market, it's that these specific imbalances need to be filled out. No ifs, ands, or buts. So what I'm going to be doing now is gathering confluences around this specific region right here. And we have another one right up top here. So 2 really big imbalance areas. I mean, these are pretty big for zones. If I measure it out, that's a 30 pip imbalance. And this one right here is going to be about a 20 pip imbalance zone as well. So if I've learned anything now, it's that these areas have to be filled out before they can continue on. It's not going to be perfect. Sometimes they go halfway, sometimes they don't, like right here. Price came back up in here, and this would have been realistically a 38.2 Fibonacci level, but I don't use those at all. So we're noting our key price points here. Our high, we have a lower high, and our low point right here at the 1.077 flat levels. Let's take our fib out on the 4-hour time frame. We'll take it right on our most recent lower high, pull it across, drawing out my key zone. We have our key level right here. You have some support right up top here. So perhaps we could see a price push into the 61.8 level right up top here. So perhaps we could see price fill out this imbalance, perhaps retest this area right here, fill out, come to the 78.8 or the 70.5% level to the 78.6, and then continue the downtrend on downwards. That seems to be the case for Euro USD, gathering confluences in one specific area in the market. And that's realistically the main theme for these currencies. We're looking to strike in one specific area, whether on a downtrend, an uptrend, maneuvering around consolidation, and working around our news events. And that is how it's done, and we react accordingly to the news events. Gathering confluences in one specific price region, whether it be through the pullbacks in the market, through working around market structures, combining that with market zones, understanding the inefficiencies in the market and price needing to balance out. That is how the game is played here at Primetime Fox FX. Everything is done with the utmost discipline, patience, and above all else, it's managing your trading portfolio correctly and efficiently and not over leveraging and working around greed. Stay sharp and trade to the best of your ability and achieve excellence in the markets.